Hey YouTube, IDTV here. I'm your host Lance Dufault, and today I'm going to be talking to you about how to invest your first $500. Alright, let's get right into it here. First off, I'm going to have to explain a few financial terms to you really quickly. First of all, a security is a financial asset that is tradable. Okay, so that can be a banknote, so like money you have, that can be like a stock, like an equity. Okay, so anything that is securely tradable. So, a dividend is a sum of money paid regularly, typically quarterly, which is every 3 months, by a company to its shareholders out of its profits. Okay, so for example, if Coca-Cola, well, not if, Coca-Cola pays, I can't remember, but a couple percent dividend yearly, so every 3 months you'll get a portion of that yearly percentage that you make. Okay, so a mutual fund is an investment program funded by shareholders that trades in diversified holdings and is professionally managed. So to sum that up, basically, you give your money to a professional stock trader, stockbroker, and they get to decide what to do with your money. Okay, so you can have a professional take care of it for you if you want. Okay, next is an ETF or exchange traded fund. It's a marketable security that tracks an index. Like, for example, an exchange. Like, a good example is the NASDAQ in New York. It's a big exchange, and you could invest in the whole exchange, like all the money invested in the exchange, whether it goes up or down, regardless of which company, excuse me, is invested in. Okay? And lastly, I would like to explain what a cryptocurrency is. It's a digital currency which uses encryption techniques to regulate the generation of units of currency and verify the transfers of funds between users. Okay, so that's why it can work independently of a central bank. It uses, if you want to cut it down to the basics, it uses code to ensure that there's no fraudulent activity involved with the transactions, okay? Okay, next I want to compare equities, mutual funds, ETFs, and cryptocurrencies. Firstly, I want to talk about equities. Equities, how you make money on them. You either sell them for a gain or you just hold them over time and collect dividend pay, which I talked about earlier. And how you lose money in equities is if you buy it and the equity goes down in value and you either need to sell it because you're financially unstable, or because you get scared, or because you can also make a bad buy, right? Okay, next, a mutual fund is good for beginners, okay? Because you you still have to pick a good mutual fund, but if you find someone who's credible and has a good track record, that's what you really want to pay attention when you're thinking about investing in a mutual fund. Do they have a good track record of making people money? If that's a yes, then you're probably pretty safe putting your money in with them. Okay, so if you're not comfortable right away with this stuff and you want to take it easy, a mutual fund's a great option. Honestly, you can definitely make money through there. An ETF is good. Honestly, they're very popular nowadays. It's just you get paid with all the dividends within the index, which is cool. Obviously, it works out to a percentage. And yeah, a lot of people are into ETFs right now. The last thing, and I want to start off with caution on this one because it's very dangerous. You can lose a lot of money, especially if you're not investing in the credible cryptocurrencies like Bitcoin or Ethereum or Litecoin. Okay, those are the three. I'm not going to say recommend, but I think those are some of the strongest coins that there are out there. Okay, but you also got to understand you can double your money in like Honestly, a couple days. It's pretty crazy, but you can lose all your money in a couple days, and it's very risky, guys. It's very risky, and if you lose your money, you could never get it back. Sometimes the market will come back, but a lot of these coins are purely scams, okay? I just want everybody to realize that. But if you feel like you're confident, I'd say go for it. If you decide you want to do that, you do that. Another thing I wanted to quickly mention about ETFs is they're also a much safer bet because they're diversified. The investment is diversified over many different stocks, okay? So you can't just get hit really hard by any one company. But the thing about ETFs is you're never gonna have that crazy, like you're never gonna make the same kind of money that you could make in equities or in especially the kind of money you could make in cryptos. Moving on, we are going to talk about how you can go about buying, well, trading these items such as equities, ETFs, mutual funds, and cryptocurrencies. I got them all here. Okay, so equities, ETFs, and mutual funds, they're all traded very similarly. It's all through financial institutions. If you don't know, because there's going to be people watching this from different countries, I do all of it through my bank, but I'm not sure. I know it's like that in America, I'm pretty sure. I looked it up. I'm in Canada, by the way. And, but no matter what, it's going to be through some financial institution. It's got to be through a bank. Honestly, I can't say that for sure, but I'm pretty sure about that. I personally can complete my trading through online banking, and I did a little bit of research, and I know Americans can do that too, through at least the banks I've looked up. Um, I think I looked up Bank of America. Um, so that's really a good way to be able to trade your securities. I just want to mention quickly here that mutual funds are only traded once per day, and that's after the market close. And then they like evaluate the price that you purchased it at the time, and they make the trades go through. It's just a little different than the other ones. And now moving on to cryptocurrencies, these are traded through crypto exchange websites. Okay, so guys, you gotta be really careful which exchanges you can use because some are 100% legitimate. I can guarantee that because I have taken money on and off of this website right here, Bitstamp. So I would highly recommend Bitstamp. There's other ones like Coinbase, but I trust Bitstamp a lot more than Coinbase. Personally, they've done some shady business, to say the very least. Um, you can wire your money, just a live wire transfer. They have a bank account that you wire it into, and you write in the message. There's a message that you can write along. You write your code that goes along with your account on Bitstamp, and that verifies that your money goes into the right account, basically. You can also use your credit card, but I highly don't recommend it because there's already like a $30 fee about for me in Canada to get my money in there, which if you put 500 bucks, it's it's substantial, but it's not a big deal. If you wanted to invest in cryptocurrencies, obviously only use trust exchanges. I do not recommend holding your money on the exchanges, guys. It's very dangerous. Even Bitstamp's very safe, and they hold 98% of the funds offline. So even if they get hacked, they'll only lose. But you could, it's just you never know. These sites could go down, and what if you lose your money? You can keep your money off the websites on private wallets, like you own the wallet. Okay, and it's used as private keys and encryptions and stuff to keep your money safe, and it's much safer even on a soft wallet, which means it's a hard, it's not, it's on the computer, like it's software. You can also get a hard wallet. It's basically, it's like a USB drive. You have to buy it, and you can store your cryptocurrency off the internet in a physical spot, and no one can steal that unless they physically steal. But if you lose your hard drive, no, you can recover. There's like they give you 12 words with it, and you have to remember these words. You can write them down. It's better than memorize it, obviously. And that will allow you to access your money even if you lose the hard storage. So it's very, very secure. So if you have two, you buy two of these. Well, if you only buy one and you lose it, you'll just have to wait until you order another one, which you don't want to do, right? So if you buy two, honestly, you only need one if you're very careful, but I'd recommend buying two if you're going to do that. But also, if you're only investing $500 at first, I would just use a soft wallet, guys. You don't gotta worry that much. But if you're getting into bigger money, use a hard wallet. You don't want to risk that, okay? Up next, I want to talk about PE ratio and market swings. Okay, PE ratio is the price to earnings ratio. It's the ratio of for valuing a company that measures its current share price relative to its per share earnings. So basically, like, how much money is it making compared to how much money is invested in the stock, okay? And it's just a good way to get an idea if the company is overvalued or undervalued, because you want to place your buy or short or whatever you're doing accordingly, right? Just really important thing to note about all this is there's sometimes massive, usually it's not that massive, but every, I think it's average 6 or 7 years, 8, I might be wrong about that. But anyways, every once in a while there's a really big, what they call correction, or you can call it a crash. So stay calm, don't be a panic seller, and you'll do fine. That's how you lose money, is panicking. Alright, so basic strategy here. Try to your best ensure to buy in dips. You don't have to wait for the market crash. It only happens, like I said, every like 7 years. So that's fine. Your best estimation, no one knows the future, guys. So just keep that in mind. Don't freak out too much. It'll go back up even if you mess up. But that doesn't mean you shouldn't try to buy in a good spot, right? Okay, if the market swings down and you know you have a good buy, hold. Okay, the only time you should sell at a loss if you think the company you're invested in will inevitably perish, go bankrupt, or will not grow and does not pay a good dividend. Okay, so like if the company is not growing but pays a good dividend, that's fine. Apple's a good example of this. Once you guys start getting more money, you're going to want always diversify your investment, so invest in more than one thing. But since you guys are only investing $500, it's not such a big deal. If you really want to, you can just put it all in one thing. Okay, if when you're looking to figure out the value of a company, always look at the market cap and the PE ratio, okay? Don't look at the price per share, okay? Because this can be very confusing. Just for a quick example, if there's 1,000 shares in a company and $1,000 invested in the company, it's $1 a share, right? That makes a lot of sense, right? But if there's 10,000 shares, it's only 10 cents a share, okay? But the company is worth the same thing. You just buy more shares, okay? So you really got to look at the market cap, which is the total value invested into the company, and the PE ratio, okay? Just want to mention quickly at the end, you can also invest in yourself. If you need equipment that can make you money, anything that can make you money that you buy for yourself, that is, excuse me, that is an investment, okay? So always keep that in mind. That's another good way to invest in yourself. Alright guys, this is the end of my video for today. I really enjoyed making it for everybody. I hope you enjoyed it, and if you did, I really hope you hit that like button and subscribe for more good content.